Jeff, title insurance is an indemnity policy and it protects you as a buyer or the lender against any problems relating to the property's title prior to the date that the policy is issued. There's a difference in homeowners insurance and auto insurance, which you pay an annual premium for and which protects the insured against any possible future hazards, whereas title insurance insures you against any past hazards. Sure, Jeff. Some examples would be a forged signature. If someone is transferring title from a prior owner to a new owner and there was any type of fraud involved, that would be a potential title claim. Also, sometimes we see claims in regards to missed liens of record, any judgments or any loans that were missed, and those type of claims. What happens is the underwriter would insure the parties against any legal fees, and they would take care of satisfying any claim that the title company missed when they examined that report. It protects the buyer and seller against any judgments or liens that have been missed or that come up in between the period of signing and recording. In Oregon, the seller pays for the owner's title insurance policy that insures the buyer against loss. If the buyer obtains financing for their home purchase or a refinance transaction, they pay for the premium, which ensures the lender in first lien position on the property. An escrow is an arrangement where an independent, trusted third party receives mutually agreed upon instructions, and we disperse those funds according to the contract provisions. Those could be funds or they could actually be documents. A preliminary title report is like a rough draft before a policy is issued. The report is preliminary to issuing an actual title insurance policy. It shows vesting or right of ownership, any liens of record such as judgments, loans, the legal description of a property, and any easements, covenants, conditions, restrictions recorded of record on that subject property. Earnest money is a deposit that's held by a neutral third party that a buyer puts down to show that they are serious about buying something, such as a property. It's like a good faith deposit. In accordance to the Real Estate Procedures Act, the buyer is entitled to choose the title company. However, it's typical and customary in the state of Oregon that the seller chooses the title company because the seller pays for the owner's title insurance policy that insures the buyer on the purchase. Jeff, there are various documents that clients receive in the mail. Any documents mailed to a customer from the title company, they should be open and reviewed by the buyer or the seller. Typically, the material requires some type of action from the party, such as needing loan numbers for loan payoff information. We don't send out any type of junk mail. You won't get junk mail from a title company. We also mail out preliminary title reports that when you receive your preliminary title report in the mail, you want to review it. It gives you a time to examine and review any liens of record on that report or any easements. Also, your real estate agent or your escrow officer, they can help explain the information on the report and answer any questions that you might have. Jeff, a settlement statement is a summary of all fees charged in conjunction with the real estate transaction and is charged to a borrower, buyer, and/or seller. Sure, Jeff. For example, if a buyer is obtaining financing, you will find all of the lender's loan costs associated with that financing. You also would find, for example, if a homeowner's insurance premium was being paid, any repair costs. Also, if an escrow reserve account was being set up for property taxes or insurance as part of the buyer's monthly payment. Sometimes the seller gives concessions to a buyer in a form of a contribution towards closing costs, and those type of charges and offsets you will often see on settlement statements as well. Oftentimes we will see real estate commission on the seller's settlement statement, prorates for property taxes, also any loans that need to be paid off against the property, and also judgments of record. If any judgments are against the seller, those will appear on a seller settlement statement. A client needs to bring current valid identification such as a driver's license or a passport. And also, if the borrower is bringing in money to close, because the transaction requires cash to close, the borrower would be bringing in a cashier's check payable to the title company.